Are you thinking about investing in Disney? Or maybe you're one of my copy traders and already have a position and want to know why I have it as one of my handful of companies to invest in. Well, in this video, I'm going to break down some of the reasons why I think Disney will be worth around double what it is worth now in the next 6 to 12 months. Stay tuned to find out why. Hello and welcome. I'm Wayne from WES Investments, bringing you stock market news, portfolio updates and training on how to make money in the market, all on this channel. So if you're new here, consider subscribing and hitting the bell so you're notified of new videos. Now the boring bits first. I am not a financial professional. This is not financial advice. Everyone's financial situation is different and you should not consider any video that you find on YouTube as financial advice. Now Disney is a huge company and I've broken down the analysis into 4 segments that Disney has created. If you'd like to see video 1, which is about parks, experience and consumer products, the link is here. Video 2 about media networks, the link is here. And this is video 3, which is about the studio entertainment segment. This covers the content creating segment of the business. Now for me, the content creation arm of Disney is where the dreams start being made. This, to me, is the most crucial cog in the Disney machine. The making of content is what drives customers to all the other elements of the business. Every year is different and it's not possible for any company to make amazing, record-breaking blockbusters every year. But Disney definitely gives it a good try. The large collection of different film studios owned by the Disney Group means that there's always a good range of content being made, all for different audiences. 2019, for example, was a stellar year. We had The Rise of Skywalker, Frozen 2, along with Captain Marvel, Aladdin, Lion King, Toy Story 4, and the biggest movie of all times, Avengers Endgame. These films contributed more than $11 billion to the global box office, shattering the previous industry record as $7.6 billion, which also was set by Disney in 2016. And remember that $11 billion from 2019 was ticket sales and not revenue for Disney. Disney gets a cut of that. And despite that, and quite strangely in 2019, studio entertainment revenue was also $11 billion. So that was actually an increase of 11%. This was led by theatrical, TV and SVOD, which is subscription video on demand distribution. And this is licensing. With such a strong lineup in 2019, there was no way that 2020, even without COVID, was going to be a stronger year as the previous one. While the films due out are really good, they are not going to draw the same level of attention as this lineup. Even just 2 of those films would have made a good year. When you consider that the top US domestic films of 2019, then you can see here, spots 1 to 6 were Disney. Number 7 was Spider-Man, which was a Disney-Sony partnership, and number 8 was another Disney film. Now, regarding cinema tickets, arrangements can vary, but the movie studios usually end up with around 60% of the proceeds from the American box office. Overseas, the number is usually less, anywhere from 20 to 40%, depending on the film distribution arrangements. Why is this important? Well, we get a lot of information regarding where these profits are coming from and how well the studios are doing. For example, we can see a film like Dumbo. It had a budget of $170 million. Of its US revenue, it would have made in the region of $69 million and in the region of $71 million from international sales, if we take an average of 30%. Meaning, from cinema revenue, this film earned around $140 million for Disney. Meaning it still needs to earn another $40 million just to break even with its production costs. If you have a look at Mary Poppins, the budget of $130 million revenue from the US was around $103 million and $53 million from international meaning a profit from the cinemas of $26 million over the production cost. And that's before it even goes into licensing, on demand, and DVD. Yeah, there are still some people that buy DVDs. I don't get it. Now, I want you to realise that these are the two worst performing films for 2019 for Disney. Have a look at this list. They are not even on here. So let's take a quick look at the list of films again. So down here at number 8, what about Aladdin? Still performed well, but what was its cinema profits? So its budget of 183 million was beaten by its US profits of 213 million, and then an extra 208 million from international, meaning the 8th best performing film for Disney in 2019 made around 239 million in profits just from cinema releases. So let's now take a look at the big boys. Avengers had a budget of 356 million. US revenue of around 515 million and international revenue of 582 million. So remember that obviously this is the Disney's cut of these box office numbers. So we're talking about an estimated 741 million in profit just from these films in the cinema. So first of all, this means Disney has lost a lot of money in 2020 due to the global pandemic, which has closed the box office globally. However, having said that, 2020 was never going to be a big hit. Mulan should have had a great impact for the business. Hopefully, it will bring many new fans from the Chinese market into the Disney sphere, while also bringing the story of Mulan to a whole new, modern and more grown-up market. Black Widow, which was the Marvel film, should still perform well for audiences when it's released, while Onward, which was straight to Disney Plus, is a great feel-good film that could quite easily become a family favourite. With such a huge hit for 2019, with such a huge hit list for 2019, 2020 was going to be a bad year in comparison, and for the film market, the pandemic just made this a whole lot worse due to the mass closures of movie theatres worldwide. For me, although these films may not provide a huge return, if any due to COVID, from the box office sales, or even licensing outside of Disney Plus, the benefits of the wider Disney group will be seen. Subscribing to Disney Plus to make sure to see all the latest Disney releases, buying the merchandise and falling in love with the character grouping. Now, the returns from these films will also indirectly be returned to the company through its multiple revenue streams. I think it's very obvious that Disney is creating its own version of the Disney princesses in the Marvel and Star Wars universe, which helps to stop these genres being exclusive for boys, and it also helps to bring out that less nerdy and far more mainstream image, which is really helping these brands to reach new audiences, and Disney is really making the most of these investments, and it's really going to pay Disney back many times over. Disney had a very large reshuffle of the Fox development slate. What we know still will be coming, however, is more from Planet of the Apes, the next Avatar film, Steven Spielberg's take on the West Side Story, the Amy Adams thriller Woman in the Window, and Brad Pitt's astronaut drama Ad Astra. All of these are not even part of the normal Disney sphere, and yet these are going to be really, really big films when they're released. Being able to put that Disney spin on them as well, and hopefully with the experience and expertise from the Disney team, being able to push into these films and Disneyfy them should help to make them much, much better films as well. So Disney has outperformed the film industry over the past few years, with an average of 2.5 billion in operating income each year from 2015 to 2019. For the purposes of comparison, this was actually $850 million between 2010 and 2014. Disney estimates that Fox made $180 million in Q3 2018. Now, obviously, Disney Plus and Hulu is part of a different segment, but I just want to bring in the information that they provide because that's going to help us with the studio entertainment segment, because of the fact that the studio entertainment segment makes the content for Disney Plus and Hulu. So Disney now has considerably more data on exactly what people are interested in watching. Viewing numbers on TV can be misleading, as it can simply be the best thing on TV compared to what's on right now. So you could bring out a really amazing show and get really poor numbers if there's a slightly better show on another channel. And if that had been released a half hour later or half hour before, you might have got better numbers. Or the fact that it was put on at that specific prime time compared to if it was put on TV at a different time when it got a lower audience. But with streaming data, you can make content far more targeted for your current user base, and also to encourage new users based on what select interest groups watch. This, combined with the announcement of Mulan going direct to Disney Plus this year, was a really exciting development. Although Disney is very adamant that this would not be a long-term thing, if it's successful, it could encourage Disney to move into this model. Just imagine if Disney was able to make 100% of the box office figures, with 60% going to studio entertainment and a 40% going to the other segments of Disney. Remember that Disney earns much less from international box office. Therefore, even a drop in overall revenue from these tickets, it could still mean a significant higher bottom line for Disney as a company. Renting a film in your living room is far more accessible than going to the cinema, especially in this modern situation. We could really see a serious downsizing of cinemas if Mulan proves to be a success, that I think it will be. I can actually see a lot of people that would not have paid to go to the cinema, paid to see this, buying it on Disney Plus, therefore actually making Disney more revenue than it would have made in the box office. Let's have a quick look at the numbers. So Mulan is estimated to have had a budget of $200 million, with a marketing budget of a further $100 million, so a total cost of around $300 million. With a price tag of $29.99, it's easy to see that you just need 10 million people to rent the movie in order to break even. Disney Plus has over 60 million subscribers, so it only needs 20% of subscribers to rent the film in order to break even. There is also a very good chance that this will help to boost Disney Plus subscription numbers, as people may sign up for a free trial to be able to watch Mulan. Obviously they'll still need to pay for the film, but signing up may well encourage them to stay, working backwards from some other big Disney films. And these numbers are based on the box office revenue divided by the average cinema ticket of $9.11. So there may be some inaccuracies, but it's a very rough estimate. In the US alone, Captain Marvel sold around 46 million cinema tickets. Lion King around 59 million cinema tickets. Again, these are just in the US. So based on these numbers, I could quite easily see 10 to 20 million rentals in the US alone. Now, I cannot imagine all 60 million subscribers will rent this film, but if they did get 60 million rentals worldwide, this would be a total of 1.7 billion in revenue, which is a similar global box office revenue to Lion King. If they were to reach this level, I think it would become a very difficult decision on Disney whether they should release films direct and skip cinemas. But I guess only time will tell on that. Now, as I've said before, Disney owns a lot of stuff. This is one segment. Make sure to watch the others. Thanks for watching. I hope you've enjoyed this and I hope you found it helpful. If you have, please give me the thumbs up. Make sure to catch my next video, which will cover the direct-to-consumer and international. Thanks, and I'll see you there.